Good morning, afternoon, evening, wherever you are. Thank you for making me a part of your day. As always, a free way you can support this channel. Like the video, leave a comment in the comment section. If you haven't subscribed yet, subscribe to the channel. I am going to start first with GameStop today. I have become convinced that the inevitable is happening. And even without this post here, I want to share some content of this post. I talked about it a little bit on the live stream, but I was analyzing it in real time. I've gotten time to actually just take a look at it, get some thoughts, and I like what I see. And I also like the stock. But, alright, Endgame, DD, how last week's actions all come together to one specific date. All the data analyzed, and I will spoil this. The date is March 19th. So I'm going to go to the very bottom of this post here and read this part and then share with you some thoughts here. So my conclusion, the squeeze is inevitable. It got delayed many times, but no matter what data you look at, the outcome is always the same. Everything points to this specific date. March 19th. Also, other hedge funds smell blood. They can take out some of their biggest competitors as well as making billions and billions of dollars in the process. There couldn't be a bigger win-win situation for them than this one. I think the squeeze is starting a few days, maybe even a week prior to March 19th. I think that it'll start March 15th and build up all the way to March 19th, where the real rocket takes off. How long is this going to last? I don't know. No one does. But I think it's going to last for at least 1 week. Of course, it's going to get more and more expensive to buy in over time, so you don't want to miss out. As always, buy and hodl. While you're reading this exact sentence, I'm going offline for a few days. All right. Anyway, Diamond Hands, we will meet again. This user in particular has posted lots of excellent commentary on what's going on, and it's really fascinating. So 7 points here at the end of this post. Well, first of all, let me back off and say that, last week what happened that caused the price to shoot above $50 to this new territory. I mean, not entirely new, but new-ish territory of over $100 a share, which is where we're sitting now. Yesterday closed at $120. That was started by some kind of catalyst in the sense that somebody forced there to be no shorting on a given day, which then that one day last week where it shot up to $200 after hours, it basically allowed that process to happen. And so now we're at this point where the stock is much higher than it was last week, and that is what has caused the ball to start rolling on this March 19th doomsday, for at least for the shorts scenario. So 7 points here. AI prediction starts around that date. The AI prediction was done with all the data available at that point in time. New calculations actually show a much higher price, 30 million, but I'm quoting the more realistic one. All right, so yeah, that's 30 million a share, but that does absolutely seem quite unrealistic. I don't expect to become a billionaire from holding GameStop stock, but if that happens, I think I'll accept that. That'll be okay. But take a look at this page if you get a chance. Market Watch Investing Stock GME, and you'll see more information about that. And all right, number 2. Remember the naked short activity on February 24th, 25th. 33 to 51 million more purchases by, you guessed it, March 19th. From February 25th naked shorting alone, and 12 million from the 24th to be purchased the day prior, because of the exception for market makers. And so there was a lot of naked short activity, not covered shorts, on the 24th and 25th for this March 19th expiration date. This is a big one right here. I was very intrigued by this. March 19th is the Xrt Rebalance day. So XRT releases dividends every 3 months. Last one was December 21st. So the next payout would be around March 20th, which is a Saturday. So Friday, March 19th. By this time, the shorts need to cover their GME shorts through XRT. There is unbelievable shorting going on through XRT. and that was a way for them to cover their shorting of GameStop. And so let's keep reading on this. Why do the shorts need to be covered by then? Shorts can't avoid by covering by directly paying XRT the amount of money for dividends, but shareholders are forced by law to pay normal income tax rates as high as 39.6% on those dividends coming from the shorts, compared to the range of 0 to 20%. If you're a millionaire with money in XRT, you're not expecting to pay obscene amounts of your dividend returns. These type of investors don't constantly make their investment loaning out shares. XRT wouldn't force shareholders to pay that tax rate. So who's fronting the bill with this? It's the shorts, if they want to continue shorting beyond March 19th, which they will be forced to cover their shorts by that date. Number 4, massive options chains. This one's really interesting to me. There are large, heavy amounts of puts for March 19th on XRT itself, which will see decreases even though GameStop has a portion of XRT, but also lots of other things have puts. SPY has puts, tens of thousands for March 19th. GameStop has more than $10,800 calls for March 19th. VIX, all right, let's see, Facebook has puts. Coca-Cola has puts. Starbucks, Johnson & Johnson, they all have heavy amounts of puts. And why is that? Because there is an institutional, there's some fear on an institutional level that things are pushing forward with this squeeze, which will cause everything else not necessarily to collapse, but certainly to decrease. So March 19th lining up perfectly. Number 5, Quadruple Witching Day. If you look up options, here's the thing I'll explain with options. If you look up options on, dare I say, Robinhood, on Webull, on anything, if you're an options trader, what you will see is that a lot of these, some of them, SPY, for instance, offers options every 2 days. Monday, Wednesday, and Friday, you can purchase options. So today's Tuesday, you could purchase an option, a call or put for tomorrow if you wanted. Most stocks, or many stocks, a lot of the big ones, have weekly options, which, if you browse Wall Street Bets, you will see weeklies. A lot of options for smaller stocks do not do it weekly, but they will do monthly. And then other options will do quarterly. And so the quarterly options expire on March 19th. There is a quadruple witching. That means that any of the monthlies, any of the weeklies, obviously any of the dailies, they will have options expiring on March 19th, meaning that it's a quadruple witching day, which also means that there's insane volatility on this day. So quoting USCF I4444, quadruple witching is similar to the triple witching dates when 3 out of the 4 markets expire at the same time, or double witching when two out of the 4 markets expire at the same time. But you should expect all kinds of effery on a quad witching date. GME mooning and crashing the rest of the market would certainly be appropriate for a quad witching date. Another thing, GameStop Q4 earnings are released 4 business days after March 19th. This is not necessarily a little thing, it is a smaller thing than most others. What happens when earnings comes up and you're expecting some kind of positive report is sometimes you will see earnings blow you out of the water, but a lot of the times, most of the time, it's an opportunity for people to buy the rumor and sell the news. And so it is anticipated with earnings coming up 4 business days after March 19th that there's a tremendous buy the rumor, sell the news type of opportunity coming for GameStop. And number 7, lots and lots of naked shorting from a year ago, from months ago, from the past, because market makers were so sure of GameStop's bankruptcy, they wrote lots of naked call options. They sold a lot of calls. And so, in conclusion, something is brewing for GameStop. It is something exciting. I was thinking about this. I shared this on my live stream yesterday. What we're seeing with the stock price with GameStop, there is something brewing. Okay, usually what happens when a stock is hyped up like crazy, and then it has the typical pump and dump type thing, is that once that stock hits its kind of crash point, or it settles. This happens all the time. And the fact that GameStop has not settled at $40 a share, and it's gone up as of now to $120 a share, that indicates something to me, that something is brewing. That the movie, when that movie is made, that it's not at its completion, it's not at its climax yet. That the action from the end of January was just kind of an appetizer, and we are going to see some insane things. And what do I mean by a stock hitting its settling point? Tilray. I mean, you remember about a week or two after all the GameStop drama, weed stocks took the platform, and we were talking about weed stocks like crazy. Got up to $63.80 a share. It got up pre-market one day to over $70 a share before doing what? Before crashing down. And Tilray is kind of at a settling point. I don't expect Tilray to shoot back up anytime soon. No matter how much I like the stock or don't like the stock, I expect it to hit this settling point and just kind of stay there for a while. That is what happens with meme stocks. Jinko Solar, something similar, topped out at $87.55 and hasn't come anywhere close to there since then, and is now at $53.14. It shoots up, and then it crashes, and then it settles. QuantumScape is another one. Shoots up, hit $130 on December 22nd, and then crashed back down. And really has just been settling since then. What's GameStop doing? GameStop, if it was to follow this similar pattern, would be doing something similar where it would be hanging around $40 a share for several months on end. And if it was a good stock in the long run, it would need time to kind of settle before shooting back up again. And what is happening with GameStop right now? Well, that's not happening. We are at $120 a share. I think most people would say that GameStop is not actually worth $120 a share at this point. I would say that's kind of arguable. I would say that in my opinion, yeah, that's on the high end, but it is worth to close to $120 a share. But what does that mean? That means that there is more action coming. If most people think that it's not worth $120 a share, and yet that is the share price, after shooting up already and crashing down, then there is something, a brew. And so, oh man, two and a half more weeks, and we'll see some fireworks. Less than 2.5 weeks, because the week of leading up to March 19th, I think, is going to be a very interesting week. So, moving on from there, Zoom. I have stayed away from Zoom the entire time. I thought, looking back on it, obviously March of 2020 was a great time to buy into Zoom, and the stock price shot up like crazy. I mean, it at least quintupled. I don't remember what it was in March of 2020, but I know it shot up to about $500 a share. And I'm wondering, this is just a random thought here. Zoom is now a part of our lives. It wasn't before. I mean, how many of you had heard of Zoom before the pandemic? And how many of you, I just think Zoom, no matter what happens with post-pandemic life, that Zoom is now in. And Zoom has become a verb. Let's Zoom together. And that wasn't the case before the pandemic, but it is now. And so I don't know what that means as far as entry points with Zoom, but I'm keeping my eyes on it. So what happened that made me think about this? Well, Zoom, if you were to check the stock price today, it shot up big time yesterday because they smashed expectations, leading to another blowout quarter. And so Q4 for Zoom was huge. They reported earnings of $1.22 a share, almost 10 times higher than compared to a year ago. And the stock, I don't think, is 10 times higher than it was a year ago as of now. And it's more than 50% higher than the consensus estimate of 79 cents on revenues of $882 million, up 369% year over year, and also well above analyst estimates of $822 million. Zoom at its current price may actually be a bargain. And so I'm thinking about this in terms of spheres, of sectors, and I'm wondering if we need to rethink a lot of these stocks, a lot of these businesses that have seen a boost with the pandemic, that habits are being formed. And this is now a part of our life, not just Zoom, a lot of gaming, Gamestop, a lot of the innovation that I expect that they'll be doing. This is a note that I'm filing away for sure. And so just wanted to share some thoughts on that. But moving on, we're going to be talking about Bitcoin. Going to talk about something I shared yesterday that I just thought was really interesting. So Democrats, if you remember from yesterday's video, if you watched it, Democrats tried to include a $15 minimum wage hike, which I thought, I am not a fan of a massive increase in minimum wage, but I thought that this was kind of brilliant by the Democrats to try to sneak that in there, because what that would cause is what am I thinking here? That would have caused people to lose jobs, because businesses can't afford to pay people $15 an hour, a lot of retail businesses, etc. And so jobs would have been lost, which would have created more dependency on the system, which would have then in turn caused more Democrat aid to come in, more dependency on the government, etc. And so I just thought, hey, brilliant play by the Democrats. I don't agree with it. I think it's an awful decision. But as far as your goals are concerned, props to you. Your goals will be accomplished, Democrats. But here we go. Democrats scrap minimum wage hike idea, but the bill is still a boondoggle. I mean, I am for certain on that. Mish, check out Mish, thestreet.com/Mishtalk. I've been following this guy for about a decade. I mean, I haven't been following him lately or over the last few years, but 10 years ago, around 2010, 2011, I followed him pretty religiously, and I do like his analysis on a lot of things. And so basically what this is talking about on Mishtalk is that they removed the push for a $15 minimum wage, which I think they would have needed to pass in the Senate. So 2 days ago, I commented on a new twist in Biden's ridiculous push for a $15 minimum wage. The twists are amusing, but my final words tell the story. It's dead on arrival in the Senate. I think Democrats realize that. Today we learned, gratefully, that all of the progressive cheers were for naught. The Democrats decided to scrap their minimum wage hike demands and all their crazy twists to pull it off. So, anyway, yeah, progressive howls. People are crying about it, but it's... a minimum wage has nothing to do with the budget, and the rules for a fast-track reconciliation bill require the bill to be budget items only. So the incentive more so is to push this relief bill forward, which, again, I still think is ridiculous. I think it's unsustainable. I think it's awful for the U.S. dollar, for the economy in general. It's a temporary relief for which we sacrifice for the U.S. economy in general. And $15 being removed from that, fine, but I know what I'm doing with this. I am converting it largely into crypto, because I want my US dollars to not melt away in my bank account. And so, anyway, an update on that story. I will be talking about Bitcoin the rest of the way, just so you know. If you're not interested in Bitcoin, now is a great time to get off. But hey, watch to the end or keep it playing to the end. I'd really appreciate it. Bitcoin recovered nicely yesterday, is hovering around $49,000. It topped out yesterday around like a little bit above $50,000 and hit a sell wall there. But yesterday was a great day as far as the recovery is concerned. The more we progress into this, the more I think that yes, it is over. We may see a dip back down to, I don't know, 46, 45, something like that. We're not going down to 43 again. I really don't think so. But as far as every metric that I am seeing, it seems to me to be more likely that we're going to be crossing the $50,000 barrier. Once we cross it, we're not going to return, that it is a permanent cross. So, unless there's an EMP or something. So a few things that I want to share in regards to Bitcoin. Okay, why $1 million Bitcoin is coming. If purchases by MicroStrategy and Tesla can send Bitcoin rocketing, what happens when bigger players start entering the market? So the convenient thing about this article is it does not say when. When is $1 million Bitcoin coming? This year? 4 years from now? 20 years from now? It doesn't say, which is, I mean, it's kind of lame if you ask me. But I do want to tell you, I've shared this before. There is, as far as I'm concerned, a possibility. It's on the extreme end, but there is a possibility that we would see a $1 million Bitcoin this year. Now, what would it take to happen? I don't think that's going to happen, just so you know. But what would it take for that to happen? It would take something like this. All right, we are at the tip of the iceberg when it comes to major adoption, major institutional adoption with Bitcoin. It is my humble opinion that every publicly traded company should and will be stupid not to own Bitcoin, have some Bitcoin on their balance sheets as at least a hedge against inflation and hyperinflation. I think that they will see absolutely that there's a need for this and that they will come rushing in and that the FOMO will be unlike anything that has ever happened before in crypto markets. And so what does that look like? I mean, all right, purchases by MicroStrategy and Tesla, that really is just the tip of the iceberg. We're seeing Bitcoin is officially mainstream. I would argue that. I mean, yeah, it is more mainstream. I did see something from Guggenheim. Guggenheim Institute announced in December or November, something like that they were getting into Bitcoin, that they thought the true value at that time of Bitcoin should have been around $400,000. And something that they said, their CIO said, that really stuck out to me was it didn't make sense when Bitcoin had a small market cap of, I don't know, $1 million, $1 billion. It didn't make sense for Guggenheim to get in at that time. But now that Bitcoin has been established as more of a legitimate asset, now it makes sense for them, which, it's kind of weird to say that now that Bitcoin is priced at $40,000, $50,000. Now it makes sense for us to get in. It didn't make sense for us back then, but that is really institutional mindset. That's how they think. And I mean, it does make sense to me in the sense that we want to put our assets to things that do have staying power. And Bitcoin has established itself as something that has staying power. And so, yes, now we will invest in it because we have seen the future of Bitcoin for a while, but there was too much of a chance that it would end up being worthless. Those days are gone. So let me read this part here. I'm going to highlight this paragraph. Tesla's purchase underpins something even more dramatic than mainstreaming Bitcoin as a legitimate cash replacement for the world's largest corporate, financial, and government institutions. These sudden influxes in demand, including a handful of recent bond issuance-fueled purchases by MicroStrategy, are having an extreme impact on the Bitcoin price. I believe we'll see the price of Bitcoin above $1 million sooner than most people can fathom. Okay, so he's taking a little bit more of a risk than I thought, but I mean, I think, what does that mean? All right, we're not talking about 20 years from now, but 4 years from now, I mean, I think that maybe that's what he's talking about here. So, I understand that $50,000 is already slightly discombobulating to the investment community at large, but that Bitcoin price is only associated with $1 trillion of total market value in a world of hundreds of trillion dollars of global wealth. If Bitcoin's market value reached the size of the U.S. Treasury market, for example, its price would reach $1.5 million, and I think that day will come. It's easy to predict $1 million Bitcoin given a long enough time horizon, considering the pace of crypto adoption across industries and the willingness of governments and central banks to provide unlimited amounts of fiscal and monetary stimulus. But when faced with the math of how much $3.5 billion in Bitcoin demand caused its price to move, the approximations led me to some staggering numbers. And so something I don't entirely agree with this author's thesis is he's saying that he's giving a little bit too much credit to Tesla and MicroStrategy with their purchases of Bitcoin. That $1.5 billion in demand caused essentially a $35 billion movement, and he doesn't give any credit to Grayscale, to PayPal, to Square, etc. But his point is, what happens when FANG gets in? You know, we don't have any news of any of those massive behemoths coming in. What is FANG? Facebook, Amazon, Apple, Netflix, and Google. What happens when they get in? That will be a catalyst that Tesla can't even compare to. And so here we go. A $3.5 billion purchase triggered an explosion of $30,000. Imagine what a $10 billion purchase from Apple would unleash. I like where he's going with this. What happens when, $10 billion from Facebook, from Amazon, maybe even more so from Amazon, from Netflix, and from Google? What happens when all of those things cause the price of Bitcoin to shoot up? Now, he's attributing Tesla and MicroStrategy that their $3.5 billion investment caused the price of Bitcoin to go up $30,000. No. But, I mean, his mindset is in the right direction. What happens when major players, much bigger players, get in on this? $1.2 million, $1 million Bitcoin this cycle is not entirely out of the picture. Again, I'm saying more like 200,000, but the difference between 200,000 and a million is not all that much. So we will see. Along with that, all right, Tim Draper. I decided I'm not going to play this video, but here we go. Tim Draper predicts Netflix will be the next to invest in Bitcoin. This is coming soon, and when I say soon, I mean, and I'm not necessarily talking about Netflix, but I'm talking about one major player, more major than Tesla, is going to get in, and that will be sort of a domino effect. And what do I mean by soon? Maybe within a month, maybe within 2 months. I would think at most within 2 months. We'll see. I mean, there are things. The wheels are moving, okay? And this is going to get wild, more wild than you can imagine. We are at a faster pace than 2017 right now. And does that mean that a higher peak percentage-wise than 2017? It is entirely possible. And so where was Bitcoin at this time in 2017? It was still under $2,000. It got up to close to $20,000. What does a 10x from here look like? Well, $500,000. So we'll see. But other news, Goldman Sachs restarts cryptocurrency desk amid Bitcoin boom. Let me read the bullet points here. Goldman Sachs restarted its cryptocurrency trading desk and will begin dealing Bitcoin futures and non-deliverable forwards for clients from next week, a person familiar with the matter said. The bank is also exploring the potential for a Bitcoin ETF. Yes, please. If you remember, Canada, there's on the Toronto Exchange, an ETF opened last week, and they now hold, in 1 week, 10,000 Bitcoin. What happens if something like that opens in the United States? How much Bitcoin will they have to hold? And how much Bitcoin will they be able to access? And what will that do to the price, you know? The trading desk reboot comes amid growing interest in institutions in Bitcoin, which has soared more than 470% over the past year. So things like this. This is the snowball at the top of the hill, and it's starting to roll down the hill. The price of Bitcoin will be much higher moving forward. Here we go. Citibank have released a 106-page report on Bitcoin. Bitcoin's attributes, quote, could spur it to become the currency of choice for international trade. Now, that doesn't mean the world reserve currency, but the currency of choice. Bitcoin is at a tipping point, and we could see this. We could be at the start of a massive transformation of cryptocurrency into the mainstream. The snowball, again, is at the top of the hill. Okay. Next article. Market wrap. Bitcoin faces long odds in bid for 6th straight monthly gain. That may seem like a bearish title, and I was curious when I read that, and it's not by any means a bearish title. But we are, if Bitcoin gains in March, which it will, which I am saying it will, Bitcoin will be higher than $45,000 at the end of March. This will be the first time ever that Bitcoin has seen gains for 6 months in a row. And it's going to happen. I'm telling you this now. We saw our correction. It is now time for Bitcoin to move up, and that's not going to take a month of trading sideways for that to happen. So I thought this was a bearish article, but it turns out it's not. There's one thing from here that I want to highlight, and that is this this indicator. I think this is a good indicator to pay attention to. Spent output profit ratio. I want to see where this link leads me real quick. Oh, Glassnode. All right, Glassnode has a paywall, so I'm curious if this is... there's tier 1 data, which we all have access to. Tier 2 costs $30 a month. Tier 3 costs $799 a month. So this is tier 1 data. So we can actually have access to this. I would pay attention to this. This is a good indicator of just when things get too hot versus when things are at a good buying point. And right now, things are at a good buying point. I'm telling you that. And based on the spent output profit ratio. So one such indicator, the SOPR, represents the profit ratio of coins moved on the blockchain. If the metric is above 1, that means most holders could sell their Bitcoin at a profit, but when it slips below 1, more traders would be willing to sell at a loss, seen as unsustainable since many holders are reluctant to accept anything but profits. And the metric dropped below 1 on Saturday for the first time since last September, according to data from Glassnode, which is a bullish sign. That means more people are willing to hold, and more people have to hold because they don't want to sell at a loss. They want to take profits. So the implication is that investors would refuse to sell until prices rose. So the SOPR metric has been reliable for buy the dip opportunities in bull markets. And in a bull market, investors are more inclined to take profit until the stop profit point and refuse any stop loss orders. Exactly what I'm talking about. So crypto analytics account Beetle News on Chinese language-based social media platform Weibo wrote in a post Sunday night, when SOPR is below 1, the available coins for sale will decrease, and it becomes easier for prices to rebound. So SOPR is below 1 right now. And that's for the first time since September. So almost 6 months. Just something to pay attention to. Now, lastly, another resource for you to check out. I'm impressed by this. Kaleo, Crypto Kaleo on Twitter. Here was his projection. The blue line, the one that's easiest to see here, this was a projection that he started at the end of the year, sometime around December, I want to say. And you can see the blue line is his projection as to where he thought the price was going. And the squiggly line, the candles here, that's where it actually went. And if you see, there's a lot of similarities in movement here. And so he's done quite a good job of predicting where the price of Bitcoin would go. So we are here, March 1st. Here's March right here where my arrow is pointing. And so we might see some sideways trading for the next week or so, according to this projection, and then we're shooting off. So March 15th, where's that price? That price is around, I can't see very well there. If you can zoom in and see it, but then let's see, April 1st. April 1st, you know, where, I mean, at the end of the month, this metric is predicting that Bitcoin will shoot above $80,000. And then, you know, it'll have a correction before shooting back up. And then April 1st, next month at this time, we will see $40 plus thousand Bitcoin as the opportunity of a century, of a lifetime. You know, we will be testing $100,000 according to this metric sometime in April. And he's done a phenomenal job predicting where we're going so far. So anyway, yeah, just, you know, it's just, I don't know, a guess as to where we're going. But so far, so good with his predictions. So where are we going to go? You know, we could be at $100,000 in April. And follow him for more information, Crypto Kaleo. But anyway, that is it for today. I hope you have a great day. I hope you make lots of returns on your investment today. Make your money work for you. All right, but otherwise, like, subscribe, leave a comment in the comment section. Until tomorrow, peace.